Happy Friday, everybody. This is your market update for September 1st. So jobs report came out this morning and actually showed job creation numbers that were higher than what the market was anticipating. Market was expecting about 170,000 new jobs, and the jobs report showed 187,000 new jobs. Now, that wasn't ultimately what we were hoping for from an interest rate standpoint, but digging deeper into the report, the unemployment rate actually jumped up above what the market was anticipating. Market was expecting the unemployment rate to stay around 3.5%. It actually jumped up to 3.8%. So this kind of counteracted initially the negative impact that the higher job creation numbers had on the market. Initially, when the report came out, both the stock market opened higher and also mortgage-backed securities rallied a bit on the news. Unfortunately, mortgage-backed securities since then have reversed course and have started to sell off a bit. And that might just be due to the fact that, where it's Friday, new month, headed into a long holiday weekend, lighter trading volume. But initially, mortgage-backed security market opened this morning up 17 basis points. And last I looked a few moments ago was down 17 basis points. So we've got about a 34 basis point swing. Still sitting in between support and resistance, support being the 25-day moving average, resistance being overhead 50-day moving average. So we'll see what the rest of the afternoon holds. My guess is that we're not going to see too terribly much more volatility than what we've seen already. Initially, stocks opened higher across the board, have since then sold off a bit, still positive on the day, but off their best levels. The Dow is currently up 77 points. NASDAQ is up 1 point. S&P 500 is up 8 points. As mentioned, headed into a long holiday weekend, lighter trading volume. Next week, there's not a ton of economic information that's coming out, compared to this week and last week. On Wednesday, we've got mortgage application data as well as some ISM services information. Thursday, of course, we got the initial jobless claims report, which will probably be the most prominent report that we watch next week, just knowing that the Federal Reserve is looking strongly at the labor market. And we've also got some labor cost and productivity information that comes out Thursday as well. So Thursday should probably be the most important day in the market next week as far as economic data coming out. As far as interest rates go, Freddie Mac published 30 and 15-year rates came out yesterday afternoon, and after several weeks of increases, we did actually see mortgage rates getting better, which is nice. The 30-year dropped 0.05%. It's currently sitting at about 7.18% nationally, and the 15-year actually was flat week over week, still sitting at 6.55% nationally. I hope that you all have a great holiday weekend. Take the opportunity to relax, re-energize, and I will see you next Tuesday.